Thank you for watching this special MPC broadcast. The Reserve Bank deciding to keep rates unchanged with the repo rate standing at 8.25%. For analysis on this, I'm joined by Professor Jannie Rossouw. He's a visiting professor at the Wits Business School, and Johan, who is the Old Mutual Group Chief Economist. Thank you very much, gentlemen, for joining us. Perhaps I can start with you, Professor Jannie Rossouw. What are your thoughts about the Reserve Bank's decision? Do you think it was a balanced decision?
Good afternoon, Nompu. Good afternoon, Johan, and good afternoon to the viewers. The decision is indeed what I expected. I expected no change in the rate for two reasons. Inflation is much higher than the target of 4.5%, but more importantly so, inflation expectations are not under control, and we have at this point in time to use the repo rate to get inflation expectations under control, to get inflation down to 4.5%. So this is exactly what I've expected.
Yeah. So, Johan, of course, there are a number of drivers to the inflation picture that was cited by the Reserve Bank governor. But one of the critical issues that we've been hearing a lot about these days is food price inflation. That's been coming down nicely, but there's a warning from him and agricultural economists that perhaps that may be reversed. Your thoughts?
Yes, I think certainly there are risks around food inflation. I don't think it'll necessarily be reversed. I still think we're on a slight downward trajectory regarding food inflation, but I think it might be slower than what we previously expected, given the risks around droughts, hotter weather, and the impact on field crops in South Africa. So it's not all negative. I think El Nino has turned out to be slightly weaker than we expected late last year. Plus, the soil is still fairly damp. We had good rainfalls towards the end of last year, even though now it's not looking so great. But there certainly are risks around food inflation. I just think it's not going to ease as far and as quickly as we previously expected. But of course, that's one of the big drivers in terms of overall inflation. So that adds into the argument about sticky headline inflation.
Professor Rossouw, given what the governor has said about headline inflation coming in at the midpoint at a later time than was previously anticipated, when then do you anticipate that we're going to receive a rate cut? Because the talk has been that at some point this year we should begin to see the rate cutting cycle.
Now, of course, we've had a lot of talk about the rate cut, but when facts change, the expectations around rate cuts will also change. And in this case, inflation has moved up in the past 2 months when a continued decline was expected. And it seems to me that inflation expectations changed. So therefore, expectations about the rate cut will also have to change. I have to stress, of course, that inflation is not a policy instrument. Inflation is an aberration in the economy, and therefore we have to get inflation under control. And if this means that the rate cut will only come later than envisaged, we have to accept that that is the effect. And I have to stress that, of course, a rate cut might be good for people who borrow money, but a rate cut is very negative for people who save, who have deposits, and who earn interest on such deposits. So in any change in interest rates, there are always winners and losers. And unfortunately, those people who save are not well organized and not very vocal.
Yeah. So Johan, the professor has sort of given us the parameters that need to be considered in making a rate decision. But are you prepared to put your head on the block and begin to suggest when we might see a rate cut?
Well, the most important thing that Jannie said, in my opinion, is that when facts change, the outlook or the interest rate expectations change. And we're in a situation where there's lots of uncertainty in the global economy when we talk about the Fed and in the local economy. And usually around turning points in cycles, you see some of this. Everything doesn't always move as you expect or in a straight line. And the cost push pressures that we've seen in terms of our local inflation numbers recently, the petrol price increase, the medical aid tariff increase that was bigger than expected, that usually leads to some, especially in a weak economy or when consumers are under pressure, that's a deflationary impact on the rest of prices. In other words, Most of us have got a limited monthly budget, so you have to spend more on those essentials, you spend less elsewhere. That puts a dampener on other price increases. And that might lead to a situation where you see the consumer goods type inflation numbers that has eased quite substantially recently, that actually head to the bottom end of the target range or below. And that's also not a great situation. I fully agree with the conservative policy-making environment that inflation expectations is a big driver and we need to get that lower, but there needs to be a balance. You don't want to drive some sectors of the basket to substantially weaker inflation numbers. So it is a difficult balancing decision. Your question was when? I think I would have said from May onwards. May is difficult. Firstly, it's a positive that the May MPC date is one day after the elections. So should the Reserve Bank have cut in May, they can't be accused of electioneering. The fact that it's only one day after probably means we haven't got the election result yet. And because of that and the uncertainty, will the governing party get a above 50% share of the vote, or where will the outcome be? There might be uncertainty in the currency market. So maybe some rand volatility that the Reserve Bank wouldn't want to cut necessarily when we've got that uncertainty. So I think the balance of opinion suggests that we'll see rate cuts from July onwards, unless, of course, leading up to the May meeting, there's more certainty around the election outcome. The rand is very stable. The cost push pressures around energy prices, for instance, and food inflation, more subdued. But I think the best guess at this stage is July onwards. But I still expect around 100 basis points of rate cuts during the course of this year. It's not going to be the cycle that we were used to in the past in terms of a big down cycle in terms of overall interest rates. It's going to be more shallow, unfortunately.
Yeah, well, your 100 basis points assumption or expectation, I think, sounds over-optimistic, because it sounds as though from the bank's quarterly projection model, they're penning a possible 50 basis points. And, now they're telling us that it looks as though they're going to be cutting rates later rather than sooner. So we wait to see what happens there. So Professor Rossouw, he said a number of things. Governor Lesetja Kganyago said a couple of things that were interesting, saying that other emerging markets have more scope to cut rates, more than South Africa, because they were more aggressive in hiking rates earlier. And he also said, we don't follow the Fed, we watch the Fed. So what is your view around the influence that other central banks have on South Africa and should have?
The Reserve Bank watches other central banks, but the Reserve Bank is an autonomous institution that must implement monetary policy appropriate for South Africa's conditions. And at this point in time, appropriate monetary policy is to get inflation down to the focus of 4.5% in terms of the inflation target, and to anchor inflation expectations at that level. And I should also add that I'm one of the economists in South Africa. I'm in favor that's in favor of a lower inflation target. In my view, our inflation target should be something like 2% or 3% and not 4.5%. You all know that I have a trademark on the expression, inflation is ungood.